Anyway, thanks for coming, and we got something sort of neat to show you. And a little background, trading Nadex is a good way to practice out a lot of your analysis, and you don't need a lot of money to do that. Okay, super, Whitney. Look forward to seeing you. But anyway, I'm just saying that I think that if you learn what we're going to go over today, it'll help you frame today. Now, when I trade, I'll use about $300 in risk on trading. But with if you're using a Nadex account, you can use a lot less amount of dollars. And if you learn how to use it appropriately, you can grow that small account into a big account. I've been around a while. I've been trading. I was a pioneer in electronic trading. I actually had a Globex machine. Back when the exchange put out about 50 outside of Chicago, and that was quite some advantage and some education to learn about the 24-hour market. And in that process, I was able to develop some trade strategies and trade setups that I still use to this day. Now, this is something that if you're not a member of our app club, download it and see how you enjoy it. But on the third button, you can see our software. But during the trading week, we put out different insights about the market, different markets that we talk about. The crude oil market is enjoying a great rally. We notified people back in the 40s that expect to see that by the time we get to May. And but these are kind of insights that seasonals and maybe trades that are really set up good that we put out through our trading app. You can get that on your iPhone or on your Android. Now, I put together. I do an early bird class in the morning, and for those of you that fill this out, I'll send you an invitation. You come watch me do it. But Adam, take care of that. But anyway, 5 steps to making money. And I talk about the emotions. I talk about the plan. I talk about the setups. And then I talk about the execution. And it's sort of a real short, what I would call direct hitting piece on how to make money in the market. Also, my book, Winning the Day Trading Game, I have on audio. Give that to you. The survey takes a couple minutes. I'll pause for a second, give you a chance to fill that out, and then we'll keep going. Okay. Well, one of my favorite markets is the German DAX. I don't know if you're familiar with the DAX, but the DAX is a market that I spent a lot of time with. If you notice today, the DAX gave us a few good trades, and if you learn about the DAX, you're really ahead of a lot of people that don't know about it, don't use it, and even if you don't trade it, it's a great market for analysis. And so one of my setups on the DAX, I think Cam heard me talking about it, and he started doing it, and he's going to talk about that today. And I thought it was pretty good that he was able to take that setup and apply it to Nadex, and he'll go through that with you today, and I think you'll really enjoy it. Like I said, I never try to risk more than $300 in any setup I'm doing. And once you get used to this, it sort of removes that fear of losing money, because you're sitting there saying, hey, the worst case here on this defined risk trade, I might lose 300 bucks. If you're doing a futures market, you can do, E-mini, it'd be 6 points. But for a stock option, it'd be $3, or for a stock, it would be $3. Now, why do I like Nadex? How many of you have paper traded, think you have something that's going to make you some money, then you go into a real market and you find out none of the things you did, when you were paper trading actually worked in a real market. Anybody ever ran into that issue? Hey, I got this great strategy. Well, here's why I like Nadex. With a very small amount of money, you can take that strategy or setup into a real market and actually see the results. And of course, your confidence will grow when you know you do it with real money. That's the primary reason I like Nadex. It's simple. They got a great app to do it on the mobile phone, and you follow the different markets in your strategies. Now, the DAX trade setup using Nadex, okay, is a 6 o'clock a.m. trade based off the 6 o'clock number. You trade it at 7:30. That's almost banker hours for me, but 7:30 in the morning Central Time when you put it on, and you can do it through a bull or bear spread, whether you want to bias the market to the upside or bias the market to the downside. Now I'm gonna have Cam, go through this and talk about it, but it's a very successful trade that you can watch using Nadex. And you can set up the amount of time you want to do and the things that you're trying to do when you're making the trade. But it's pretty simple. You wait for that 6 o'clock reading on the DAX, and you build a pivot number around the DAX, and then when it breaks out of that band, then you go to Nadex and do a bull or bear spread. And he'll give you some of the things that he's done with it, but it works. It's easy to learn. Now, if you sign up. We'll give you an invitation. I'll be doing live tomorrow, and I'll be doing this and try to show you a real market trading, and you get to participate on that. You ready to go, Cam?
Yeah, can you hear me?
Yeah, loud and clear.
Great. So should I just do the slide to start my slideshow?
Yeah, go on and take it over. I just wanted, I was telling them about how you listened to one of my presentations one time about the DAX and how you developed this Nadex trade. Then I started doing it. I said, this is a pretty good trade. So share that trade with them and your experience.
I'll be happy to. Yeah, when you share that little tidbit about the German market, it set off a light bulb, and I've just done great with it.
Well, take it away and teach it what you learned.
Very good. So. Okay, I'm just waiting for my presentation to load up. Okay, can you see my slide okay? Okay, are we ready to go then? Well, good afternoon, people. I'm Cam White. I'm with Trading Pub, and I'm going to expand on what Tom was talking about and talk about that risk less than $100 with Nadex. I'm going to talk about what Nadex is, and I'm going to go over 3 trading strategies and give you some links to some excellent free Nadex resources. So a little bit about me. I'm a partner relationship manager with Trading Pub, and I'm responsible for partner strategy review. I'm a Trading Pub's in-house Nadex expert. I'm the author of a monthly newsletter called The Probability Report, and I also have a personal blog called The Inquisitive Trader, which basically chronicles my experiences trading with Nadex. I use that blog to dissect trades of the day. But before I go any further, let me go into a quick trading disclaimer. And I'm sorry, there's a little bit of an allergy, so I'm kind of losing my voice a little bit. But trading binary options involves risk of loss, and it's not suitable for all investors. You should carefully consider whether trading is suitable for you in light of your circumstances and financial resources. And always remember that past performance is not necessarily indicative of future results. Okay, I'm really pleased to announce that we have a book that we just launched this past week. It is a great book. It's called Trading Made Simple, Strategies that Risk Less Than $100. It's free from Trading Pub, and it is 160 pages of Nadex trading strategies, solely dedicated to Nadex trading strategies. It has 11 complete strategies from 7 Nadex experts, and no 2 strategies are alike in the book. It's completely free from Trading Pub. I see that Jana's putting up a link to it. We'll talk about it at the end of the book. But if you trade Nadex, it's a great book. If you're curious about Nadex, I think it's a must read. So what are Nadex binary options? Quite simply, Nadex binary options have been called yes or no trades. Every trade, every contract has a maximum value of $100. That means the absolute or lose per contract is $100. And before you place your trade, you always know what your maximum risk and maximum reward will be. And this will be great because trades can never run away from you. So with Nadex, what you're doing, and I'm going to explain this in detail, is you're making a decision about the likely direction of a major index, commodity, or forex pair relative to a strike price within a defined time frame of your choosing. So I'm going to repeat that. You're making a decision about where the market's going to go. Is it going to be up or down relative to a strike price on the charts within a defined time period that you have chosen? As long as the trade is active within that defined time period, you cannot get stopped out. And you can hold your trade until expiration, or if it's moving against you, you can exit the trade early. So, how do binary options work? I'm going to use an example with gold, and let's assume it's 12 o'clock noon, and the current price of gold is $1,254, and it's climbing. You've got a high probability strategy for trading gold futures, and all of your indicators agree that gold is on an uptrend. In fact, you believe when the pits close at 130 that the price of gold was $1,254. So you go to Nadex, and you find a strike price at $1,250. Well, the market's already at $1,254, and you find the expiration of 130 when the pits close. And if you believe that the market's going to be above 1250 and it's already 1254 and climbing, pretty good chance that the marketplace is also going to agree with that. And they may determine that there's a 70% chance that the marketplace is going to settle above 1250 when the pits close at 130. In this instance, you would be risking $70 to make $30 on a high probability trade. In Nadex terms, that's called an in-the-money trade. It's kind of good all day unless the market reverses and takes you out. But the market's in agreement, 70%, that you're probably going to win that trade. Now let's take a look at the opposite side of that scenario. Let's say that the price is gold is at $1,254 and it's climbing, but you think there's going to be a reversal. In fact, you think when the pits close at 130, the market's going to reverse and it's going to settle at or below 1250 by 130. The marketplace is not going to agree with you at 12 o'clock noon, and they're going to say that there's a 30% chance that it's going to happen. And in this particular instance, you'd be risking $30 to make $70 on this lower probability trade. So who is Nadex? They are the North American Derivatives Exchange. They are a wholly owned subsidiary of the IG Group, which is listed on the FTSE 100 index. It's based in Chicago, and it's subject to regulatory oversight by the CFTC. When you trade with Nadex, you're not trading through a broker. You're placing your orders directly, paying broker commissions. Your member funds, what you deposit, is held in a segregated account in a bank in the United States, and there is full transparency on every trade. That means that Nadex does not take market positions. You're not betting against the house. Rather, Nadex is facilitating a trade between your opinion about what the market is doing and somebody who has an opposing opinion about that same market within that defined time frame. Nadex was previously available only to legal residents of the United States, Canada, Mexico, and U.S. territories. As of the beginning of March, it's now available in 47 countries, and when you go to nadex.com, you can see if it's available in your country. But a lot of the folks that were in here that logged on from Europe, Germany, Belgium, Finland, Sweden, UK, several of those countries, Nadex is already available for trading in those countries. So when you place a binary options trade or a spread trade on Nadex, everything starts with your opinion on the direction that the market is headed. There are lots of markets to choose from. You can choose from Forex pairs, major indices, popular commodities, and then you want to select the asset that you want to trade, or the S&P 500. It could be gold. Your next step will be to select what your expiration time frame is going to be. If you have a long time horizon, you could make it a weekly expiration, which would expire at the close of business on Friday. It could be at the close of business daily. It could be on the hour, or they have 20 and 5-minute binary options that are also available. Depending on the trade, there is a binary option available that suits the way you like to trade. Then you want to determine if you want to buy or sell a proposition. You're going to select the number of contracts you want to trade, determine the price that you want to pay for that contract, and then place your order directly on the exchange as a market order or a pending order. You can let your trade ride till expiration, or you can close your position early. The cost for Nadex, well, first of all, you could open up a 2-week demo account for free, and I'll give you a link to that later on in the presentation. The minimum funding for a live account with Nadex is only $100. As Tom alluded, this is a great way to test out a lot of theories that you have, test out strategies that you currently use for futures or Forex, and apply them to Nadex. You're not exposing a lot of risk. There are no brokers involved, so there are no broker commissions, and the way Nadex makes money is to charge exchange fees of 90 cents per contract per side. So if you open and close one contract successfully, the maximum fees that you'll pay will be $1.80. The fees are capped at $9 per side. So if you trade 10 contracts successfully, you would be charged $9 to open, $9 to close for $18. If you traded 20 contracts, your maximum fees would also be $18, and so on and so on. And perhaps the best part about this is, sometimes you're going to lose a trade. And if you have a contract that expires out of the money for a full loss, you are charged an order execution fee, but Nadex does not charge the order settlement fee. So you're only charged one side of the round trip instead of being charged for an unsuccessful trade that opened and closed. You only get charged 90 cents per contract on a losing trade that expires out of the money. Quick summary. Binary options are based on a yes or no proposition. It's your opinion about where the market's going to be relative to a strike price within a defined time period of your choosing. You always know what your maximum risk and reward are before you place a trade. You have multiple markets to choose from, so you can trade the market you're most comfortable trading. You have spike protection. You cannot get stopped out, and it's a regulated exchange. Nadex is regulated and it's subject to stringent oversight by the CFTC. Your funds are held in a segregated account, and it's easy to deposit and withdraw from Nadex. A couple Nadex resources. Tradingpub.com/demo will give you access to a 2-week Nadex demo account funded with $25,000 in play money. And you can use some of the strategies in this presentation or in the book that I alluded to earlier in your demo account to see how it works out for you. You can fund a Nadex account by going to tradingpub.com/Nadex. I'll click on this link. You'll have access to a library of really good Nadex articles, and I periodically break down trades and diagram them in a cookbook recipe, give you the rules for the trade and how the trade played out. So there's a lot of information on Trading Pub's website. If you're new to Trading Pub, I suggest you sign up. It's all free. And then finally, I put out a monthly newsletter called the Probability Report. I'm also going to click on that. And the Probability Report will give you a calendar. This is May's Probability Report. These are all the Nadex free webinars that are going to be available in May. Shameless plug for the book we just put out. And then I also highlight a particular trade that worked out pretty good or a strategy, and a webinar or video which explains the strategy. So the Probability Report is another free resource that you can use to learn more about Nadex. Okay, so it all starts with your opinion. Which way is the market heading? Is the market on an uptrend? Is it on a downtrend? Is the market moving sideways? Do you have a strategy for each one of these scenarios? So I'm going to take a look at the Dow 30 today. And I took this screenshot at 11:40. This is a 5-minute chart of the Dow. And right here, at this point, is where the market is. This red line, I'll just make it a little bit darker, represents the 1 o'clock expiration. I chose the 11 to 1 o'clock time frame. At this point right here, where do you think the market is likely to end up based upon what you're seeing? Relative to this line right here, and this vertical line being expiration, is the market going to be above the line? Or is it going to be below the line? Type in an A if you think it's going to be above, or a B if you think it's going to be low. Okay. The belows have it. There are a couple of people that think above. The belows have it in this particular example. So what we're looking at right here is the market was right here at excuse me, at 1040. We've got a line that's right here. There's a strike. These little red and blue boxes up the right side of the chart. This is the Nadex price ladder on the charts. You have the sell price on the left and the buy price on the right. And right at this particular point, this is what we call an at-the-money trade, ATM. Okay? And at this point right here, the marketplace is determined. If you want to buy this market at 11:40 with a 1 o'clock expiration, it's saying you're going to risk $53 to make $47 per contract. By the way, when I took this screenshot, it was exactly the same if you were selling the contract. So there's almost an even split between buyers and sellers on the price ladder at this point. And that's what at the money is all about. So what's going to happen at 1 o'clock? If the marketplace continues to grind north, then the buyers are going to win. This guy's going to lose what he risked, and this person's going to win 47. If the marketplace grinds down, then the seller wins 47, and the buyer loses 53. Every contract is in an increment of $100, with that $100 pie being split between the buyer and the seller. Okay, that's at the money. So we had a lot of people thinking down in this particular case. By the way, we'll see how that trade played out. Let me go to another strike price. This is where the at the money trade was. Let's go up here. Let me go up a couple strike prices. Now what do you think? Will this particular, at this level, will the marketplace settle above this line or below this line? An A for above, a B for below. Okay, everyone's saying below. Okay, so here's how this particular proposition worked out. If I'm going to sell this particular strike price, I'm going to risk $73 to make $27. And if I'm buying this proposition, I'm going to risk 30. By the way, I'm rounding right now, to make 70. Okay, this particular strike says it's way up here. The market has to climb all the way up here to get there. 30% of the marketplace thinks there's a 30% chance that this is going to happen. I'm going to risk 30 to make 70. The marketplace, you guys have determined almost 100%. The marketplace at that point in time determined there was a 73% chance that the marketplace was going to finish below. So this up here is an out of the money trade. This one here is in the money because the market is already below this strike price. If this contract expired right now, it would be successful. So in the money, you're always going to have a greater risk associated because it has a higher probability of expiring successful. Out of the money, you're going to have less risk and a greater reward potential with a lesser probability of expiring in the money. Okay, let me go down to, here's our at the money. Here's this strike price. I'm going to drop down here now. How many people think that the market's going to be above this line or below this line by 1 o'clock? An A for above, a B for below. Okay, now the aboves have it. A couple of belows, but most of the answers are above, are going to be above. Okay, so in this particular case, if I'm buying this market, I'm already in the money. And in this case here, I'm going to risk $73 to make $27 if I'm buying from down here. And if I'm selling the market, I'm risking 30 to make 70. So in this case, I'm out of the money down here because the market's way up here and it would have to come all the way down here for me to win. And this is much safer. The market agrees that it's going to be, the marketplace will stay above this line. So what I'm trying to do is hedging allowed? Absolutely. There are a number of strategies. What I'm doing is showing you the concept in Nadex of at the money, in the money, out of the money trades. Now let's see how this whole trade actually played out. So let me go back to my little pen. This is where we made our decision to trade. and there was our at the money line. The marketplace settled right there. That's where it expired. So right here, if you bought at the money, you lost 50. If you sold at the money, you won your $47 if you sold. Up here, if you sold your in the money trade, what was it, about $30? That's what it was. That's what you pick up. And in this particular case, since it closed below here, the out of the money also won. So you are risking 30 to make 70. If you sold right here, you would have made $70. So if you had contracts selling this thing, expecting a sharp dive off this, maybe a Fibonacci retracement or an upside down V or whatever, you would have picked up $147 on these three trades. Okay, on my trading plan, I traded a small account. I opened it up when I came on board with Nadex, with Trading Pub in June. Funded it with less than $2,000. I have a daily trading goal of $50 in profits. I never ever risk more than $5 on any given trade. And when I come across a new strategy, I test it at least 20 times in demo before going live, because I need to have hard data on how a trade is working. I need to know. I need to have a report card. My probability of success in a trade is determined from my demo experiment, and my probability of success needs to be greater than my risk reward on every trade. So if I'm going to risk 80 on an in the money trade to make 20, I need to know that I have an 85% or greater success rate. If I'm risking $70, I need to have an 80% or greater success rate, and so on. If I'm risking 50 to make 50, I want a 60% or greater success rate. When you place orders in Nadex, here's the Nadex order ticket. I've got a ticket on the left and a ticket on the right for the same proposition. And here are the elements of the ticket. At the very top, you have what you're trading. In this case, it's the DAX that Tom was talking about, the Germany 30 index. It has a 4 p.m. expiration. It's going to expire. The current, where the market currently is indicated. What the bid and offer sell, the sell and buy price are, the number of contracts you're going to trade, and the price window is populated with what the current market price is if I wanted to buy this particular contract. At the bottom of the ticket, if I'm going to buy it for $61.50, it's going to tell me that my maximum loss is $61.50. My maximum profit is $38.50. Well, I've got 2 hours, and that's a market order. If I clicked place order, I'd be in the market probably for a $61 maximum risk. But I've got 2 hours and 40 minutes, and a lot of things can happen in that amount of time. So in this case, what I like to do often is go over to the price window. I'll select the contract. I want to buy it, but I don't want to buy it for $61.50. I want to buy it and see if I can get it for $40. I want to get it on my terms. I'll populate that window at 40 and place an order. When I do that, it will not get accepted in the market until the market retraces enough to fill me. It'll be held in a queue as a working order or a pending order until the marketplace comes and satisfies me. There's a chance that my order won't fill, but I like to engage the market on my terms. Sometimes I lose out on a trade because of that, but I always like to know that I'm getting a trade filled on my terms. Okay, so what's on today's menu? I'm going to quickly go over an at-the-money trading strategy, an in-the-money trading strategy, and an out-of-the-money trading strategy. And the first one is, going back to what Tom alluded to, is the DAX strategy. It's a nice breakfast trade for me. I'm in Central Time, so this trade starts for me at 6 o'clock in the morning or 7 o'clock Eastern Time. And the time period that it's traded in is from 7 a.m. in the morning Eastern Time to 9 a.m. So by 8 o'clock Central Time, this trade is over. I call it a nice breakfast trade, and it's German, so there you have it, the Strudel trade. So just before 7 o'clock, I take a look at the economic calendar and take a look and see if there's anything impacting the German markets or if there's any pending news in the U.S. before 9 o'clock that might impact this trade. I check the daily, hourly, 15 and 5-minute charts on the DAX. Is it going up or down? What are my indicators telling me? I use the T-line, which is the 8 exponential moving average that's heavily promoted by Stephen Bigelow. I use the 50-period simple moving average. I use the slow stochastic oscillator at 1233, and I'll check the 5-minute Ichimoku cloud. And I just want to make sure that I've got a general sense over multiple time frames what the market is telling me, if it's on an uptrend or on a downtrend. Then I'm going to choose the 7 a.m. to 9 a.m. Nadex time period. And what's going to happen is, once the 7 a.m., after the 7 a.m. opening price, I'm going to check the hourly candlestick, and I'm going to watch it develop. And I'm going to go through multiple time frames, but I want to make sure the candlestick is confirmed bullish or bearish. And that can take patience. Sometimes it can take almost an hour, almost the entire first hour, to confirm whether that bar is actually going to be bullish or bearish. If it's bullish, then I'm going to buy the DAX, selecting the first Nadex strike price below the 7 a.m. hourly candlestick price. If it's bearish, I'm going to sell the DAX, selecting the first Nadex strike price above the opening price at 7 a.m. Then I'm going to place an order that best suits my risk-reward criteria. It could be a market order. It could be a pending order. If the marketplace is in a strong upward or downtrend, uptrend or downtrend, I'm going to consider an Nadex spread that Tom talked about. Okay, so here's 4 days of the DAX. This is a 1-hour time chart. Going left to right, you'll see that the 7 a.m. candlestick here, this one here is followed by a bullish. This led bullish, it completed bullish. The 7 a.m. controlled the 8 a.m. bar. It never came down and threatened the opening price. That one's good. Next day, bearish, bearish. So this one's good. I'll just put a check mark here. This day, bullish, bullish. That one's good. This day, big bearish, big bearish. If you backtest this strategy, taking a DAX feed, you'll get a DAX feed on Nadex on your demo or on the live account. You can also get it on investing.com. If you use Thinkorswim, it does not have a DAX feed, so you're going to have to find some service, either Nadex or investing.com, to get your DAX feed. But if you backtest this on the hourly charts, you're going to see that this pattern repeats itself almost every day. It happens with high frequency. So with that information, you've got a binary decision. You know that the marketplace is going to go up at the 8 o'clock hour or down based upon the activity you see on the 7 o'clock hour. The exception to this rule is never get in front of a falling knife. This is a particular day where you have a 4 o'clock, 5 o'clock, 6 o'clock. Here's the 7 a.m. candlestick. You're in a sharp downtrend. You're on a really sharp downtrend. The marketplace is gapped away from the T-line, the 80 EMA. It's going to return back to the T-line before it continues its downward progression. If you're on a really sharp downtrend or a really sharp uptrend, watch the 7 a.m. candle. If it's reversing the trend, it may not be a day to trade it, or you might want to be just particularly careful. Okay, and so here's the day of the DAX testing. This chart looks really busy, but right here, this is where the 7 a.m. bar started. Here's expiration right here. Huge bullish candle to open up the market. I don't know why that happened. There was no particular, but it shot up. And remember, my rule is to buy from the first strike price below the opening. So I put a buy order on the market at the first strike price below 109.86, risking $50 to make $50. So the marketplace shot all the way up. I didn't think I was going to get filled at all, and lo and behold, it comes right back down, right back down. By the 8 a.m. hour, it's barely bullish. It came up a little bit and then shot down, filled my order around 8:15 right here, and then expired in the money for a $50 profit. That doesn't happen all the time, but it's amazing how often I actually do get a fill if I'm patient and I'm waiting for the market to retrace on me. So that's basically, this was an exercise. This is an exaggerated instance of this particular strategy working. This was an at-the-money trade, but it was a pending order. There's no way I'm going to get an at-the-money fill up here. I had to wait for the marketplace to come down, fill my pending order before I took back off and expired at a profit, risking $50 to make $50. Okay, DAX strategy, the Strudel strategy. I tested this in the fourth quarter of last year. I spent 2 months testing it, did 40 trades before I actually went live or even talked about it. I made them all on my demo account. They were all taken between 7 and 9 a.m. I had strict rules. I was going to risk 50 to make 50 in every single trade. The testing also assumed that I opened it with a $500 opening balance, risking $50 per trade. I didn't expire any contracts early, and I held all till expiration. Here's what happened really quickly. The first 10-day period, September 17th through 30th, 8 wins, 2 losses. Second period, 9 wins, 1 loss. Third period, 2 losses, 2 no-fills, 6 wins. Fourth time period, 3 losses, 6 wins, 1 no-fill. And here's what happened after 40 trades. I did 40 trades, 29 were successful, 8 were unsuccessful. I had 3 no-fills for a net profit of $1,000 and $1,050. If I added that to my $500 account, hypothetical account balance, less $59.40 in total exchange fees, my $500 account grew to $1,490, which is a 200% return on my opening balance. That was using a 1-to-1 or 50 risk, 50 reward risk scenario. No trades were exited early. So in summary, with the Strudel strategy, it's 7 a.m. to 9 a.m. Eastern time. If you're buying, if the 7 a.m. Hourly bar is, if it's bullish, you buy below the hourly candle 7 a.m. opening price. If it's bearish, you sell above the opening price, and then you place an order that best suits your risk-reward criteria. If the marketplace is running away from you hard, consider a spread. That's what Tom does, and it's amazing how often this works. On to the next strategy. We have an in-the-money trade. In the money, once again, you're going to risk more to make less, but you have a higher probability of winning. In this case, I want to thank Sean Jantz, who's the founder of the Binary Trade Group, for this strategy, and you can go to binarytradegroup.com to find out more of them. He has something called the carrot trade, and the carrot is the upside down V that you see on your keyboard above the number 6. And it basically describes something that happens quite frequently with U.S. indices during the lunch hour. It takes advantage of declining volume during the lunch hour. It works with the S&P 500, the Russell, Dow, and Nasdaq, as far as I know, and it repeats itself a lot. So with the binary trade group, they even have a Facebook group, and they have all kinds of tools to help you identify if that particular trade is in play. And this is where it all starts. First of all, let's just take a look at what the carrot actually is. This is the 11 to 1 o'clock time frame. There's your upside down V. And the in the money strategy is to sell from an area of safety. The marketplace has made its reversal. It's not going to threaten you. You sell from risk $70 or $80. You make $20 or $30, and your lunch is paid for. So that's what this particular trade is all about. And I'll show how Sean sets this whole thing up. Okay, Sean uses Thinkorswim as his platform to identify his setups. Every day he puts out a battle plan, and he actually shares his desktop with his subscribers. So the gray area here that you see is the value area. Here's value area. Value area high is up here. Value area low is here, and you basically know where the orders are likely to be for the following day. Oops. Let's go back one. Okay, so you had, sorry about that. So you have value area high, value area low. He's basically going to do a chalk talk. He even does a YouTube every day where he shows you where the market has been, where the likely direction of the market may be going, what the indicators are telling you, and then he updates through the day to see how his battle plan is actually working out. So with the carrot trade, we have this vertical line right here. This is the 1 o'clock hour. You can see that the marketplace is moving up, and it's hitting the upper Keltner channel. There's resistance happening up there. There's a reversal star candle having here. Indicators are starting to show up below that this pattern may be exhausted. Volume is on the decline. A carrot trade or a carrot setup is in play. Okay, as the marketplace continues to move forward, we've now done our reversal. He's calling out that the bearish reversal is in play. Now this indicator down here, the Fisher transformer, is lining up with all indicators being bearish. That's going to indicate a sell opportunity from up here. And you want to be able to go maybe $70, $80 risk up here to get your trade, to get your in the money trade. And once again, you're protected. Once the market starts on its downtrend, it's not likely to bounce back up and take you out. If it does, since you have a lot of money at risk, as soon as it gets near this line, you need to kill that trade and take a loss. But that's not very likely. So once again, here's the carrot trade, how it played live on the Nadex chart. It went up, reversal. Signals were triggered by Sean. It was pretty obvious. You took your sell up here. Risk was 80, reward was 20. The marketplace shot down, expired. This was never threatened, and it's easy money. So, recapping the carrot trade, you want to watch the index that you're going after, whether it's the S&P 500 or the Russell 2K. You want to select the 11 to 1 o'clock p.m. time frame. You want to see if volume is on the decline going into the lunch hour. Is the marketplace grinding upward going into the lunch hour? Are your indicators and oscillators showing that that condition is getting over, that market is becoming overbought? Is it developing a reversal pattern? And you want to place a sell order once that reversal pattern is confirmed. Your average risk will be $70 to $80 for this deep in the money trade. And now I'm going to go to out of the money trades. And this is something I'm actually been testing in demo. I like what I'm seeing. And I'm going to thank Sean again because I use his battle plan to help me out with this. And I call it the opening bell trade. It's the rapid price movement that typically occurs at the opening bell. The marketplace normally has a lot of momentum, and as soon as 9:30 hits Eastern Time, it's going to shoot up or it's going to shoot down. And I'm relying on it heavily on expected price movement on the opening bell. And I'll take a look at today's S&P 500 to show how it plays out. So once again, here's today's battle plan from Sean. And it shows, this is on a 15-minute chart, this is Thinkorswim. It's showing, this is value area low, here's value area high, here's today's point of control right here. This is where the orders are happening. Here's the upper Keltner channel, lower Keltner channel, and this right here is 9 a.m. So the opening bell is going to be at 9:30. I'm watching what this marketplace is doing, and what it did was it was moving up. I expected a bounce off value area low and to come back down. I was hoping that was going to happen, so I watched it. This candle wicked up, and sure enough, it started to come down. And as soon as I saw that, coupled with down below, all of these indicators are bearish. I'm thinking there's a high probability that this marketplace is going to tank at the opening bell. So I want to look for opportunities to trade, not only at the money and in the money up here. That's in the money. This would be at the money. I'm looking for opportunities down here to sell out of the money. So here's what happened. At 8:30 there was economic news. That was mixed. There was good unemployment, but there was other data right here. The market shot up and then started its way down into the 9 o'clock hour. And right as the marketplace was doing this and it settled, I was looking for my trade opportunities at 9:30. This strike price here is at the money. That's going to offer me $50. Up here, I'm looking at in the money, which would be probably about $75 risk. And then I was looking way down here, and I found a strike down here that offered $15 risk. So the marketplace opened it right here at 9:30. It shot up, and then it went Tanksville. It shot straight down. And what that did was it made everything good. This one is good, this one is good, and this one here is looking really good. As a matter of fact, at this particular point, this one is good for, this one is already up $40 before expiration. Now, I watched this reversal pattern happening with these green arrows on a 1-minute chart, and the S&P 500 can get really funky between. I wasn't quite sure whether this market was going to shoot all the way back up, so I took profit down here and locked in $40 profit. So that's where I closed this thing out. As it turns out, that was a smart move because I got something for it. The marketplace ultimately finished right here, which is above this, and I was selling down here. So I would have had 0 down here, or I would have lost $15. Instead, I made $40. So I risked 15, I made 40. That's almost a 3-to-1 return on this contract. This one here was 1-to-1. That's good. And this one up on top was good all day long. So I really wanted to focus on this, and I find that quite often with out-of-the-money trades, you have to have an event that triggers it. The opening bell normally has a lot of momentum. Today I had enough information to suggest that the marketplace was probably going to go down, and today it worked out really nicely for me, and it was nearly a trifecta. If this market had not reversed and continued to go on down, I would have picked up $85 here, 50, and 25 up here in profit. One other thing you can do with out-of-the-money strategies is, let's see. Okay, so rules for the opening bell trade. I select the 9 o'clock to 11 o'clock time frame on the S&P or the Russell usually. I take a look at where the market has been overnight. I take a look at the 1 hour, the 4 hour, 15-minute time frames. Where is that market moving, and where is it relative to value area high or value? Where is the marketplace in the price in relationship to the previous close? Is it likely to fill that gap? Is there economic news, geopolitical news, or earnings report that will influence the movement of the market at the opening bell? Then I want to find an out-of-the-money strike price that offers me a $20 maximum risk or less before the opening bell at 9:30. I can hedge that sell that I did previously with a buy way up north. But if I do that and I have a sell that's deep out of the money and a buy that's deep out of the money, as soon as that marketplace makes its move, one of those contracts is going to be a loser, but I kind of hedge my risk one way or the other. Almost every morning the marketplace is going to move sharply in one direction or the other, and with $20 or less at risk, you can afford to take a few losses, and you will be able to take profit quite a bit. Another thing to do with out-of-the-money trades is to trade on the crude oil inventory reports every Wednesday. They're released at 10:30. Crude oil inventory news often, the actual numbers often widely miss the estimates. This happened on April 8th this month. And in this particular case, I just watched this market chopping where it was. I placed a couple of sell orders down here. The upper one, the one closest to the marketplace, I risked 20. And the one down here, I risked 15. The crude oil actual numbers widely missed estimate. The market tanked and expired in the money for both. So I picked up $80 here, $85 there, for $165 on the crude oil inventory reports. You can do the same types of things with the non-farm payrolls. Any event that really moves the market. There's an out of the market. There's an out of the money opportunity that's potentially in play. AB, there's no Thinkorswim symbol for the DAX. You need to use investing.com or Nadex. In summary, Nadex binary options give you a trading edge. They can be traded during or outside of normal trading hours. It gives you managed risk. You always know profit or loss is. You can see your trade through expiration or get out early. It has a low capital investment. You can open it for account for as little as $100. You can't get stopped out as long as your trade is active. Nadex real-time charts and trading platforms are free to use. They're now available not in 49 countries, it's actually 47 countries. And you can download your free Nadex demo at tradingpub.com/demo. So, action items. Get the book. It's free from Trading Pub. Jana's got a link that she can supply to you on how to download the book. It's 160 pages. There are 11 trading strategies in there from 7 really good Nadex experts, including Daryl Martin, Sean Jantz, Crystal Comer, Kari Lane, the folks at Trading Group, and Rockwell contributed a couple strategies as well. And when you get the book, sign up for a 2-week Nadex demo. If you've never traded Nadex before, it's super simple. You just drop in your username, first name, last name, phone number, email. You're done. You have access to a 2-week demo account funded with $25,000 in play money. And book, you can test the strategies from this webinar. When you open up a live account with Nadex, shoot us an email and we'll give you full access to our Nadex library, Trading Pub, videos, and the probability report. You can fund your account with as little as $100. That's tradingpub.com/Nadex, and send us a confirmation that you've actually funded your account, and we'll grant you full access to our Nadex library. And that is my presentation, and I am open for questions.
Hey Cam, it's Raleigh here. Thank you for that great presentation on what Nadex is and those 3 strategies for trading Nadex binary options: in the money, at the money, and out of the money. I also want to let everyone know that the strategies that Cam discussed today, plus 8 additional strategies for trading Nadex, are all contained in the new book that he just talked about, Trading Made Simple: Strategies That Risk Less Than $100. It's free, and the download link is in the chat panel. I also want to let everybody know that when Tom Busby was presenting at the beginning of today's webinar, he did extend a free pass to his live trading room so you can watch how he trades markets live, and that's good for tomorrow. And I think Jana's going to post that link. Yes, she has, for that room. Now, Cam, as you were talking, there were several questions that came up, and I wanted to log those so that we could make sure that we could take advantage of them. And one of the first questions that came up, Cam, on your first presentation when you were talking about the trading strategy in the DAX, it came across to AB that the odds seem to be bad for the buyer. Would you agree with that statement?
You know, the thing about it is that when I tested out this strategy, it was during the late summer. It was actually September, October. The marketplace still hadn't really ramped up. There wasn't a whole lot of volatility in the marketplace, and I got filled all the time, risking 50 to make 50. That was actually pretty good. Lately, with the volatility in the marketplace, the rules have actually been working better, which means that Tom's strategy of using an Nadex spread is winning out more often. If I try to be patient and get 50 to 50 risk reward on the DAX strategy, there are lots of times that I'm not getting filled.
So I think from this perspective, the straightforward answer is it's not like the odds are in favor of the buyer. It just really depends on the strike price that you select, whether the market is in the money, at the money, or out of the money, and and what your strategy is for trading the market as to whether it makes sense to sell or to buy relative to a strike price and an expiration time. Cam, there was a question from Dennis. He said, what hours does Nadex allow trading?
Okay, so it's pretty much about 23 hours. Overnight, the only downtime for Nadex is right now, which is why I didn't go live on the Nadex trading platform. The U.S. markets, the commodities pits are closed, the U.S. indices are down, and there's a 1-hour period of time where the Forex markets are also not available. Starting at, I believe it's 5 o'clock Eastern time. Not exactly sure of that. The Forex pairs will open back up. You can trade those all the way through the night. The German DAX market opens up at 2 o'clock in the morning, and the FTSE, I believe, is around the same time. on Nadex. The U.S. markets come online at 9 o'clock Eastern time, and the commodities open up when the commodities open up. So there are trading opportunities almost all day long, with the exception of right now for about an hour. 5 to 6 Eastern time. Okay.
Oh yeah, good. Thank you for that, Carl, and Cam, thanks for that answer. Another question here is that, on the carrot trade and on the opening bell trade, do you have to have Sean Jantz indicators to spot those trades?
No, not really. I mean, I like to use it because it helps me. But if you trade futures or forex, I mean, there are a number of ways you can. All you have to do on the opening bell is have a really strong indication of whether a gap is likely to close. I just like using things like the value areas that are provided because it provides me a lot of comfort. But by no means do you have to use that. You just need to have a strong opinion about, on the opening bell strategy, whether the market's going to go up or down with any kind of momentum. And so, no, you don't. On the carrot trade, same thing. If you see volume declining and you see the market starting to lose its steam and you see a reversal candle or a reversal pattern, whatever indicators you use for that, you can do.
All right. Linda asked Cam, he said, if you trade both an out of the money sell and hedge it with out of the money buy and the market doesn't move much, you could lose both legs. Is that correct?
Absolutely. That's a risk you take, but you're not if you're risking no more than, in my case, it's rare that I risk any more than $15. If I hedged both ends of, say, a crude oil report, and the market came out flat, yeah, I'm going to lose $30. But that's one of those things where that's the exception, not the rule, particularly on crude oil. Most of the time it misses, and there's a big spike one way or the other. So I have no way of divining which way the market's going to move. So I basically put I hedge both ends of it. But you need to understand the one thing I didn't really strongly talk about. When you demo out of the monies, what's really cool about it is the price that the market doesn't have to reach that strike price for you to start making money. As soon as the out of the money trade, as soon as the marketplace gets anywhere close to that strike price, you're up $10, $20, $30, $40. So you can make money without the money trades without the marketplace actually touching your strike price.
So Cam, I note that a lot of the things that you focused on today were based on like hourly binary trades. Do you ever look at daily trades, and are there 5-minute binaries as well?
Yeah, I mean, I love doing dailies. I mean, there's some great strategies for dailies, and in the book that we were talking about, there's some just tremendous daily strategies in there. I like doing dailies. On the 5 minutes, honestly, I'll play around with them and demo a little bit, but those are just too fast moving for my particular trading style. 20 minutes aren't bad, but I prefer the hourly time frames. That's just me.
And it's interesting, folks, because I can see that there's a lot of questions coming up here around platforms and charts and things of that nature. Just to be clear, I think and you saw an example of it of what Cam just showed you a little bit earlier, where he used Think or Swim as a charting package, if you will, that's very rich with its indicators and capabilities, and he uses that to evaluate the market, and then goes to Nadex chart to actually place the trade. I know that there are some folks that can take a very straightforward approach and just trade off the Nadex platform using the Nadex charts. They have a rudimentary set of indicators that you can plot, moving averages, for example, and stochastics, Bollinger Bands. and things of that nature. And that may be all you need as a trader. But the thing here is that many people will use the strategies that they use for day trading, for example, their futures accounts or Forex accounts, things of that nature, use those setups to spot entries, and then look over at Nadex to see if there is a setup or a probability that favors them.
Okay, and Dave Wilson asked on the Strudel strategy, should I wait till the 7 a.m. candle closes, the hourly candle closes, to place a direction in the candle? That's the safest thing to do, Dave. But sometimes, I mean, my advice on that is once you are absolutely 100% committed that the 7 a.m. hourly candle is bullish or bearish, go ahead and pull the trigger.
Super. And I think, you know, one thing that we just want to reinforce here, folks, is that, you know, for anything that's new, before you risk real capital, we recommend that you test it. And if you're, for the first time, taking a look at Nadex, they have a very straightforward and easy process for signing up for a demo account. And they'll give you a $25,000 you know, play account to work with, and you can, you know, practice these strategies right away. I think Jana's just put a link together for that. So that really kind of brings to a conclusion today's presentation, and I really want to thank Tom Busby and Cam for the time that they took to prepare and to make their presentations. I want to remind everybody also that there's a couple of great offers that are out there. Number one, please take advantage of registering for Tom Busby's free pass to his live trading room. That's effective tomorrow, and so you can jump right in there, and Tom will look at the DAX trades, early morning strategies there. You can ask them questions about trading binaries in that. And also, as we mentioned, we do have a free ebook that we've made available where we've tried to bring together a great collection of some of the best traders out there that are regularly trading Nadex, whether it's on, you know, hourly, whether it's on dailies. There's a section there on stuff there, and the book also includes links to videos where each one of the contributors, you know, you can go specifically and see a video where they really hone in on the kind of strategies that they present. So we really wanted to try to do something comprehensive here for Nadex binary options, and I think we've achieved that goal. I also want to remind everyone that today's session has been recorded, and we're going to send everyone that registered a link to that recording, and we're going to do that this evening so that you can have that right away and plenty of time to take advantage of, once again, Tom's free session tomorrow. So once again, thank you, Tom Busby. Thank you, Cam, for all the time that you took to put this together. And I'd like to thank all of you for coming and helping to make this a very successful webinar. So on behalf of all of us at Trading Pub, we'd like to wish you a very pleasant rest of your day. Take care and be safe. And we hope to see you at our next event.